I think it should be, let me just quickly check. It's an assignment 3 for this year, I think. Yeah, this year, first semester, which was dealing with your trade receivables and so forth. So that's what we'll be going through today. Just let's see. Before we proceed, yes.
Can you please send us the question paper?
The question paper. Okay, no problem. Let me do that right now.
Sure.
Okay. Just give me a sec. Okay. So does anyone have a question on anything that we did last week? Maybe they're waiting to ask in the class. Hey, did you receive the question paper? Did I send it to the right? Tell me if you got the question, the assignment, the questions.
Wait,
It's the correct group.
Oh, you got it.
no,
Okay.
I didn't.
You haven't. Oh no, I sent the wrong one. Give me a second. Okay, I sent it. Did you get it? Did you now receive it?
Still downloading.
Okay.
Yeah, received. Thank you.
All right. Perfect. So you're welcome. So we can proceed. So we start off with our question 1, which is out of 20 marks, which says Dichalo Trading, a registered VAT vendor, uses the periodic inventory system. The VAT rate is 15%. The following is an extract from the financial records of Dichalo Trading for January 2024. So you have your trade receivables, the opening balance from January the 1st, which is 88,000, and then you have your credit sales, 182,300, and then you have your cash receipts journal, which is your trade receivables column total on 31 January, which is 93,600. And then you have your sales returns journal, trade receivables column 31 January, 9,700. And then you got additional information, and it says at month ends, the bookkeeper completed a debtors reconciliation and found the following. The first one, on 10 January, a client returned goods sold to him on credit in the amount of 930 Rand. this transaction was incorrectly recorded in the purchases returns journal instead of the sales returns journal. And then it goes on to say on 18 January, Mr. J. Banker paid 700 cash in partial settlement of his account. This transaction has not yet been recorded. And then number 3 says it was noted that there were credit balances amounting to 1,055 that appeared in the trade receivables ledger. Further investigation disclosed that these balances were in respect of transactions that were concluded with creditors' accounts during December 2023. The inexperienced bookkeeper opened these creditors' accounts in the trade receivables ledger. The trade payables control account was, however, not affected by these incorrect entries. Number 4 says credit sales of 300 Rand was posted correctly to the sales account and the trade receivables control account in the general ledger, but was not posted to the specific debtors account in the trade receivables ledger. Number 5 says the trade receivables column in the sales journal was overcasted by 1.4. Number 6 says credit note number 30 for 308 Rand was entered correctly to the sales account and the trade receivables control account in the general ledger, but was not posted to the specific debtors account in the trade receivables ledger. On 15 January 2024, Dijalo Trading was informed that S Swallows, a debtor who owed the entity 1,260, had been declared insolvent. The amount must be written off as irrecoverable. Number 8 says on 31 January 2024, Dijalo Trading charged interest on overdue clients' accounts of 550. And then it goes on to say you are required to complete the trade receivables column in the general ledger of Dijalo Trading for the month ending 31 January 2024. And then the first thing that I want to ask you before we start off with, what account is a trade receivables control? What account do you think it is? Yes, you may answer, Nkululeko.
I think it's an asset account.
It's an asset account. Why do you say it's an asset account?
Because it's money that you need to receive. It goes into the bank account.
Okay, that is correct. So when you're dealing with a trade receivables control account, it is an asset account of debtors or people that are owing us that are supposed to pay. So which means if it's an asset, we know that assets increase on the debit side and they decrease on the credit. So which means our balance brought down at the beginning of the year that they told us, which is 88,000 on the 1st of January, will be recorded on the debit side. That is an easy one, right? Okay, and then we proceed. They told us that we had credit sales of 182,300. I think the easiest thing that we can do, let's go through the additional information and then we can solve it as we go. I think it's much easier. So let's start off with additional information number 1. It says on 10 January, a client returned goods sold to him on credit in the amount of 930. This transaction was incorrectly recorded in the purchases journal, returns journal, instead of the sales returns journal. So what this means is that there was a client that we had previously sold goods to on credit. But then due to other reasons that maybe the goods were damaged or they were not the right quantity or quality or whatsoever the reason is, they returned them back. And as they returned them back, we had an inexperienced accountant. Instead of recording this transaction in the sales returns journal, they recorded in the purchases returns journal. So which means if ever we had a certain amount on sales returns journal and also we had a certain amount on purchases returns journal, when they added that 930 to this, which means purchases returns were more than what? Than the way they were supposed to be. And here it means that the account was omitted as they entered into the wrong account. So it means here it's short with that same amount. So in order for you to rectify such an error, you will subtract this 930 from the purchases returns journal and add it to what? To the sales returns. Do you guys understand this one?
No, I don't. Can you please repeat?
Okay. So let's say we have our purchases journal, or let me just say purchase returns. And then we have our sales returns. Okay. So we know, okay, the first thing that happens when we sell a product, isn't it? We know that sales is an income, right? So let's say, for example, we sold goods worth 500 Rand. Our sales, since it's an income, on the credit side of sales, will record 500 Rand. Because sales is an income and income increase on the credit side and decrease on the debit. But then when we sold these goods worth 500 Rand, the client decided to retain 250. So which means on the debit side of sales, we need to what? Record this 250 to subtract it. And then we need to record on the debit side of what? Of sales returns journal, so that it goes hand in hand on how many sales returns do we have. I don't know, does that make sense? So
Yes.
instead of our accountant coming to record these 250 returns on the sales returns journal, they mistakenly recorded it on what? The purchases returns, at which, you know, purchases is now us buying from another supplier or a business on credit. But here it's not us buying, but it's a client that bought from us that we need to adjust the transaction for. So what our bookkeeper did, they recorded it on the wrong journal and forgot to write it in the sales returns. So what we need to do is to minus that 930 from the purchases returns and add it correctly to what? To where it's supposed to be, which is the sales returns. Does that make sense?
Yes.
Okay. So that this is what happened here. So what we need to do is just simply record
Sorry,
this
sorry.
930. Yes, sir.
Just assist me. The purchases returns. On
Yes.
which side does it increase? On which side does it decrease?
Okay. So we have the purchases. I'll start with the purchases. And then we have the purchases returns. So if ever we were to buy goods on credit, which side of the purchases do we record that goods? Who wants to take a guess? We bought goods on credit. Which side on the purchases T account do we record these purchases?
Isn't it credit? Credit side.
Why do you say credit?
You said I must take a guess. I'm taking a guess.
Yes, obviously when you take a guess, at least you must have a reason to say, I took this guess because I think this and so happens when you do this.
Okay. I'm just taking a guess. I don't know why.
Okay, so she says the credit side. What about everyone else? Okay, let me ask you this. Whenever we are making a purchase, we are buying something from someone. We know that these purchases that we are buying, they're actually asset as it was. It's either inventory that we are going to sell. Or we can look at it in another way of an expense or asset. And you know that both of them, they both increase on the debit side. Okay. Here's our T account of our purchases, which is the DR, and then we have the CR. We bought goods on credit. Remember, if you have bought something on credit, two accounts are being affected, which we already know that the first one is what? Purchases. Which means the second one is what? Said what? Payables, right?
Trade payables, yeah.
So which means if trade payables, you know that it's a liability that we are owing that company that you bought goods from. And you know that all liabilities, they increase on what? On the credit side. Do you both agree?
Yes.
So if they increase on the credit side, which means this is supposed to increase on the what? On the debit side,
Right.
each time we
Yes.
have a trade payables account, or each time we have a credit account that or credit purchases, let me say. And then also vice versa is correct. If ever we are returning goods, which means if on our purchases account, we had bought goods for 600 and then we return 400 rand worth of goods, which means from this amount, we're supposed to subtract it by how much? By 400. Is that correct?
Yes.
Which means this part side on our credit side of purchases, we will record what?
400.
Purchases, returns of how much? And then on the purchases returns, on the debit side, we record what? With how much? Does this make sense?
Yeah, yes, it does.
Yes. So which means, remember, when dealing with accounting, what you do on the left, you do on the right. And also a transaction that is a debit balance, there's another account or transaction or account that is affecting the other. So each account in terms of accounting is another account that is affecting it, because it's a double entry, which means whatever that has to happen on the left also has to happen on the right. So it means if we are to record a certain transaction on a debit side, there's another account that is affecting that transaction that we must record on the debit side or credit side, depending on the transaction. Do you now understand?
Yes.
Okay. All right. Since you understand, then we can proceed. We just said, okay, you said this is supposed to be recorded in the sales returns journal. So let us go to the next one. It says on 18 January, Mr. J. Barker paid 700 in cash in partial settlement of his account. This transaction has not yet been recorded. Okay. So we had a client that was owing us money, and maybe let's say they were owing us let me this pen. Okay, let's say they're owing us 1,000. And then on that 1,000, they made a partial payment of 700. But due to the transaction has not yet been recorded, which means on our bank account, maybe we do see that there's a 700 that got into our bank account, but in our books, we haven't recorded that, okay, we received 700 Rand from a certain client. So this is basically what they're telling me, that there was a notification of 700 Rand that the bank showed, but it has not yet been recorded in the cash receipts journal to say we have received this amount of money from a debtor. Which means this amount needs to be recorded where? On the cash what? Receipts
Cash
journal.
receipts.
So which means on your cash receipts, you what? There will be your bank on the money that you received, and then you add that 700. Do you have any questions on this one? No questions. Okay. If there are no questions, then we proceed to the next one. The next one says, it was noted that there were credit balances amounting to 1,055 that appeared in the trade receivables ledger. Further investigations disclosed that the balances were in respect of transactions that were concluded with creditors' accounts during December 2023. The inexperienced bookkeeper opened these creditors' accounts in the trade receivables ledger. The trade payables control account was, however, not affected by these incorrect entries. Okay, before we deal with the error that has occurred, I just want to say that if ever you are dealing with a trade receivables, a T account of trade receivables control, and then you see something that has to do with the traders trade receivables ledger, you ignore it because it's not affecting what? Your trade receivables control. Because remember, with a ledger, just as a ledger is just a journal that has individual data that to say, okay, we have Mr. Nkululeko, he bought so and so much goods from us for this amount. So there is his account that each time he either buys more goods on credit or he pays, we record on that trade receivables ledger. And then that amount, that total amount that he has paid, we now transfer it from the ledger to the trade receivables control. So whenever you're dealing with a trade receivables control account, and then you get to see an information that's talking about trade receivables ledger, you ignore it because it won't be affecting your trade receivables control. Do you understand? Because we are not dealing with individual accounts, we're dealing with the whole trade receivables, the total amount of payments and credit sales and so forth. Do you understand? Yes.
Can I ask, is the trade receivables control account not the total of all the individual accounts?
Yes, it is the total.
So now, does that not say if the individual account is omitted, it will affect the total?
Okay, it depends with the question as well. But if they say most of the time, they will tell you that the individual account was omitted, but the trade receivables account, control account is up to date or is correct.
Okay, no, I see the end of the, okay, understood.
Yes. Because mostly that's where they end. They won't really try to confuse you or make it complicated. Mostly they'll tell you it was omitted on the trade receivables ledger or it was recorded an incorrect amount, but they'll also tell you, but your trade receivables control account, it's correct, there's nothing affected. Just as you can see from this one, it says the trade payables control account was, however, not affected by these entries. But at the same time, they're talking about what? Individual accounts. And then at the end, they will say what? The trade payables control account was not affected. Those are the same things that the receivables control. They won't really mix a trade receivables ledger and a control account in the same question or equation. Do you understand?
Yes.
All right. Okay, so this one we ignore it, does not affect us. And then we move to number 4. Number 4 says credit sales of 300 Rand was posted correctly to the sales account and the trade receivables control account in the general ledger, but was not posted to the specific data account in the trade receivables ledger. So do you see the example that I was telling you about on number 4? They're telling you that it was omitted, but however, even if it was omitted, it is still correct in the what? Trade receivables control account. Do you see that? Do you see the question, the statement, the additional information?
Yes.
Okay. So which means on this one, it also does not what? Affect us.
It's not affected. Yeah.
Yes. And then we proceed to number 5. Number 5 says the trade receivables column in the sales journal was overcasted by 1.4. Okay. So in accounting, we have what we call an overcast and an undercast. An overcast is, let's say, for example, a client paid you 600 Rand. But when you are recording it, you mistakenly record it as what? 6,000. This is an overcast. And an overcast is recorded in the same, no, it's the opposite actually. The overcast is recorded in the opposite. So let's say, for example, this overcast was made in a CRJ, cash receipt journal. You record the difference in your cash payment, which will be your 5.4. Because we are saying, instead of us recording that we received 600 Rand, we mistakenly recorded that we received 6,000. But we don't have 6,000 in our account, we only received 600. To rectify this error, we will go to our cash payments journal, we record the 5.4 so that it balances off the actual amount that we have in our cash receipts or in our bank account, if that makes sense. But when you're dealing with an undercast is now, if instead of us recording 6,000, we mistakenly record 600, which means that the remaining 5.4, we still record it in the cash receipts journal because it's money that we're supposed to show that we are receiving it or we received it. Do you understand? Any questions?
I'm lost with this one.
Okay. If there are no questions, then which means this overcast which happened on the sales journal will go to our sales and then we need to subtract by what? By 1.4 because it's an overcast. Including this amount.
You were breaking them.
Which means if it's an overcast, we need to subtract it. Because we're saying in this amount that we have here, they mistakenly recorded an over amount of 1.4, which we do not have or did not sell in terms of our sales journal. What do we do in order for us to remove that 1.4? What do you think we need to do in order for us to remove that 1.4?
Look, can you hear me?
Yes, I can hear you.
Yeah, you were off for quite some time. Okay, but now yeah, we couldn't hear you.
Okay. All right. I was asking where were you lost?
When you were explaining that overcast, what I want to know is
Okay.
when
yes.
the trade receivable columns on the sales journal, this 1,400
Yes.
that we need to minus, are we going to use the cash receipts or to minus, or because on the figures I don't see
No,
any.
Yes.
I'm saying on
Okay,
the
I see what
totals
you
that they
mean.
gave us, I
Okay.
don't see the sales journal.
Oh, all right. Okay, no problem. They won't show you the sales journal, but they showed you what credit sales. Which credit sales are recorded in the sales journal? Do you see that? Is my network okay?
You are breaking. I don't know if it's only me.
Your network is very horrible.
No, I also can't hear him.
Okay, can you hear me now?
He's still breaking.
Okay, can you hear me now?
Yes.
You can hear me now. All right, perfect. Okay, I was saying that the reason being that they don't record or write sales journal is because they gave you credit sales, in which you know that credit sales are recorded in the sales journal. Do you understand? Yeah, I think
Okay.
it's my network is acting up. Can you hear me? I feel like
Yes.
my network
Yes, I can hear you.
is acting up. You can. All right. Okay. So that's the reason being. So they told you that we have credit sales of 182,300. And then they told you that the trade receivables column in the sales journal was overcasted by 1.4. So you simply come this side and say minus 1.4. Do you now understand?
Yes.
Okay. Is everyone else here?
Yes.
Okay, perfect. All right. So we can proceed to number 6. Number 6 says the credit note 30 for 308 was entered correctly to the sales account and the trade receivables control account in the general ledger, but was not posted to the specific debtors account in the trade receivables ledger. This all does not affect us because they told us that the trade receivables column account, it was recorded correctly. So again, number 6, you ignore it. It's not part of what we are dealing with. But then if we were dealing with ledgers, then yes, it was going to affect. Okay, then you move to number 7. Number 7 says on 15 January 2024, Dichalo Trading was informed that S Swallows, a debtor who owed the entity 1,260, had been declared insolvent. The amount must be written off as an irrecoverable debt. So let's say, for example, you had John who was owing you 600 Rand, you have a business, maybe you're selling goods and services or so forth. And then John was supposed to pay his debt a couple months ago, and then you only get to realize that John maybe has been declared insolvent or is now bankrupt, and he can no longer pay you that amount that he owes you. In a business, you can't keep record of those monies saying, maybe when John comes back, he's going to pay us when he has it. But if we see that in terms of the financial period that we have, he hasn't paid, we need to record John as a bad debt. Because when you're dealing with accounting, you need to estimate your bad debts, and also you cannot overstate your profit, but rather estimate your debts on people that may not pay you your bad debts. Because imagine overstating your profit, only getting to realize that only 30% of the people paid, the rest didn't, and 10% can't even pay you, they're broke. So it's rather safe to underestimate your profit and estimate your bad debts so that it will give you a heads up that you say, okay, from the amount of goods that we sold throughout the year, we think that a certain amount of this we may not receive it due to bad debts. Even if by the end of the year, maybe you have estimated like 2.6, but then it ends up being 1,000. It means that you have an extra 600 that you record as income because you did not overestimate your profit. Do you understand? Do you all understand?
Yes.
Okay. All right. So which means on this one here, we had Mr. S Swallows, who was owing us, but is declared insolvent. They can't pay us anymore. So we need to record this amount as a bad debt to cancel it off. But then whatever, sometimes it may happen that a person may be broke, and then they get to come back after a few months and be like, I was declared insolvent, but I am now eligible to work and pay off your debts, so I'm paying this much. When they come back, we record that amount in the cash receipts journal as a bad debt recovered. If they do come back to pay back the money they owed us. But if they don't, we would have already recorded it on our bad debts or credit loss account. So which means this one is a bad debt. We need to record it in the bad debts account. Do you have any questions on this one? Any questions? Okay. If there are no questions, then we proceed to number 8. Number 8 says, on 31 January 2024, Dichalo Trading charged interest on overdue clients' accounts of 550. Okay. So what happens at times is that if you're in a business that also deals with selling goods on credit, and then a client, however, was supposed to pay you on the same date that you had agreed that they will pay you, and they don't pay you, you charge them what we call interest. When you charge them interest, you need to record it on their ledger account to say if they were owing us 500 Rand and then the interest that we're charging them is 50 Rand, we will now say on their account interest income charged on them paying late, which means they now, instead of owing them owing us 500, they now owe us 550. And then we need to come to our trade receivables control account and record that interest income charge that we did on that client. So which means that now dealing with our trade receivables column control account, we had our 88,000 here. And then here we have our sales, which is our sales journal. And then here, that's how you record your interest income, because it's increasing the trade receivables control. So you record it as the 550. Sorry, I record, okay, 550. And then on this side, it is recorded in the general journal. The general journal is a journal whereby you record all the other transactions that may somehow or however not have a journal of their own. So you record them in the general journal. Okay, and then why is it erasing what I'm writing? Let me just give me a second. Okay. So here we have 88,000. Here we have 550. Then here's our sales journal. Here we say it's general journal, which is your interest income. And then here you have your sales. Okay, then we move to our credit sales, at which we need to subtract this credit sales by 1.4. How much do you get if you subtract 182,300 minus 1.4? How much do you get? How much do you get?
180,900.
180,900. Okay. I'm not sure why is it. Okay. It's 180.
900.
Okay. 180,900. Here we have 88,000. And then here we have 550. How much do you get if you add the 3? If you say 88,000 plus 550 plus 180,900,
102.50.
No, did you add all three? This
Uh,
one plus this one plus this one.
88. It's
So it's
88,000.
80. Yes, 88,000
Oh,
plus 18900 plus 550.
278800.
I'm getting 269,450.
Oh, my bad.
What is everyone else getting?
269,450.
269,450. The reason why I am adding this 269,450 is that there is no way that the debit side will be less than the credit side, because at the end of the day, our balance brought down still has to come to what? To our debit side. So which means this side needs to be less always, so that we have a what? A balance brought down at the end on the debit side. So which means it becomes easier for you to calculate. Here it's going to be 269,450. Then on balance brought down, you record 0 because trade receivables control account does not have a balance brought down on the credit side. And then we will have a bank on the money that we received from our debtors, and then bank is the what? J. Then let's deal with the transaction that is affecting bank. We have cash received journal, which is 90 what? 3,600. We said that the transaction affecting bank was which one? We have one here. Do you see it? So which means on that one, what we need to do is to say 93,600 plus 700. How much do you get?
$97,000.
As in 97 or 94? I'm getting 94,300.
Oh, I made a mistake. I said 96. Sorry.
Okay. So it will be on 94,300. Are
Yeah.
you all, is everyone following? No one is lost behind, or no one is left behind? Are we all moving together? Is there anyone who seems to be lost, or is there anyone who wants to add? No one. Okay. If there is no one, then the other account that affects the credit side of the trade receivable control account is your credit losses. Remember, they told us about the credit loss that swallows a data, which is number 7. On 15 January 2024, Dicello Trading was informed that swallows a data who owed the entity 1,260 has been declared insolvent. So that amount needs to be recorded where? On the credit side of. Yes? There's someone wants to say something?
No.
Oh, okay. All right. Okay. And the last account that we now need to record in the sales journal, I mean, on the trade receivable account, is your sales return journal, at which we had the transaction that they told us that's affecting our sales returns, which is on the first, which says on 10 January, a client returned goods sold to him on credit in the amount of 930. This transaction was incorrectly recorded in the purchases journal, returns journal, instead of the sales returns journal. Is that first transaction that I was explaining to you, that what you need to do is to say 9.7 plus 930 to find your total sales returns journal amount. How much do you get if you add the two
10,630.
10,630.
You said, yeah.
It's 9.7 plus 930.
Yeah, 10,630.
10,630, which is your sales returns journal. Sales returns. Yes, gonna be SRJ. And then now, since we know that the debit side is equal to 269, 450, we subtract with everything that's on the left, which is your minus 94,300 minus 1.260 minus 10,630. How much do you get? So if 269, 450 minus 94,300 minus 1,260 minus 10,630. How much do you get?
163, 260.
163, 260. Is everyone else getting the same? Is everyone else getting the same amount?
No, I am lost.
Okay, where are you lost?
Where are we subtracting that balance from?
Okay, so remember we added everything that was on the debit side, which is this. What's going? Okay.
Yes.
Yeah. So remember we had added everything that's on the debit side, which is 88,000, your 1,890 and the 550.
Yes.
So it gave us this 269,450, which is right here.
Mm-hmm.
And then now we are saying this 269,450 minus everything that's on the left side on the transaction, which is 94,300. The other one is 1,260, and then the last amount is what? 10,630.
Okay.
So by subtracting all these, we get that 163,260 that she said. That's the one we recorded on balance CD, which will come to be your balance brought down.
Okay, get it.
You now understand? Okay. All right. So it will be your 163,260 right here, and then here it's gonna be 0. And then you are done with your trade receivables control account. And I want to show you something. Do you see how easy this thing is? And it carries 20 marks, which is 20% of your either assignment or exam. It will just be here. And these are easy 20 marks that you can get, that you must be smiling when you see this question to say, hey, God is great. Do you see that?
Yes.
Okay, so is there anyone who has a question or who wants more clarity or who wants to add also before we proceed to the next question? Is there anyone with a question? Okay. If there's no one with a question, then we can proceed to question number 2. So I think I will try for us to do question 1 and 2 because they are long mark questions, and then the remaining we can finish tomorrow. So let us do our question 2. You know, you must actually love doing FAC 1502 because when you're now climbing the board, now dealing with your 16 sevens, it'll be a nice journey. So here where you are now, you must be smiling, saying, hey, counting, it's easy. Okay, so we proceed to question 2. Question 2 says, The following information relates to Baker, at which we have our balance at 31 August 2023, which we have our plant and machinery at cost, which is 102,000. And then we have our accumulated depreciation, plant and machinery for 55,920. And then we go to additional information. It says, according to the asset register, plant and machinery consists of 2 fresh machines of equal value. Both of the machines were purchased by obtaining a loan from Baker Bank, and they were charged 15% interest per annum and installed on the same date. And then we have B, which says depreciation is written off at 20% per annum by the diminishing balance method. And then C says, on 31 January 2024, management decided to increase production capacity and purchased a Prince machine on credit from MEG Ltd for 108,000. One of the press machines was traded in, reducing the amount owing to MEG Ltd to 84,600. D says on 1 February 2024, installation charges on the new machine amounted to 7,200 were paid in cash. Okay. Before we proceed, they want us to post this into our asset realization account, which is a machinery realization. But before we move to that, in accounting, there are 2 ways that we depreciate an asset. The first one is your straight line method. You have a straight line method at which the formula is your percentage that they'll give you times the cost price times period, which is your months, over 12. So this is your straight line method, percentage times cost price times N representing your period over 12. The second one is your diminishing balance method, also known as the carrying or book value method. At which the formula for this one is your percentage times open bracket cost price minus accumulated depreciation close bracket times N, which is a period, over 12. So you need to understand and know these formulas by heart, that if they tell you you are using a straight line method, you know the formula. If they tell you you are using a diminishing balance method, you know the formula. And then the other second thing that I want to add, if ever we are to buy a machine or equipment for, let's say, for example, 50,000, and then they tell you that installation or delivery for this machine amounted to a certain amount, that amount needs to be added to the cost price of the machine or equipment that you bought, so that we can find a total amount of the that we paid for this machine, the machine that we now have. So anything that has to do with the installation of the machine, the delivery of the machine, you add that amount to the price that they said the machine was, so that we can come up with a total amount of the, or total price of that machine that we bought. Do you understand? Do we all understand? No one has questions, no one is lost. Are we all moving together?
No, we're not.
Okay, where are you lost?
Please repeat.
Okay, where do you want me to repeat? Everything, or a certain part?
You are breaking. Yeah, just after the formula. After you explain the formula.
Where do you want me to repeat?
Everything.
Okay, let's see. Can you now still hear me, or I'm still breaking?
I can hear you.
Okay, you can name it. So I was saying, when it comes to accounting, we have two methods that we use when depreciating an asset. The first method is your straight line method, which the formula is your percent times your cost price times your n over 12, which n over 12 represents the period. And then in the second formula, it's your diminished or carrying value or book value method, which is percentage times cost price minus accumulated depreciation times use, or that they'll tell you you have to use one of them to calculate depreciation. So you must know them by heart. And then the other thing that I mentioned was, if ever they tell you that you bought a machine for a certain price, maybe let's say 50,000 rand, and then they tell you in order for you to have that machine running, you have to pay a certain amount for installation, or you have to pay a certain amount for delivery. Those two charges, you add them to the price of the machine so that you can come up with the total or actual price that you actually paid in order to have that machine full and running. So that delivery that you have from taking the machine to wherever you bought it to bringing it to your workplace, you need to add that to the cost price of the vehicle or the machine that you have. And then also, if you needed people to install the machine for you and you had to pay them a certain amount, that certain amount, you also add it to the cost price of that machine. And then you add the totals, you come up with the total price of that machine. Because even the installation itself is the cost of having that machine. Do you understand?
Yes, I do.
Right. Okay, so now since we have talked about that, then we can now proceed to our asset realization account, at which I'm going to tell you the steps. Step number 1, remember, if you are selling an asset, we have an asset, which means on our, they said yes, what? Machinery. We know that machinery is an asset, right? And we said assets increase on the debit side and decrease on the credit, right? So let's say we have a balance at the beginning of the year. Okay, just give me a second, my whiteboard closed. Hey, can you guys hear me? Sorry, my network is a bit terrible today. Can everyone hear me?
Yes.
Yeah, no, sorry, my network today is acting up big time. Okay, so I was saying we have steps that you need to follow in order for you to understand the asset realization. So let's say, for example, here you have a machinery. We know that machinery is an asset. It increases on the debit side and decreases on the credit. So which means if we have a balance here of 50,000, and then they tell us that we sold a machine worth 5,000 rand, which means from this amount, we need to subtract what? 5,000, is that correct? Are we all here? Can you all hear me?
We can't
Sorry,
see
sir, you're
why.
breaking.
Okay. And then we have what you call an asset realization, which is your machinery realization over here. So which means by us crediting this amount, it needs to be recorded somewhere. And where it's being recorded is your asset realization. And then on the debit side of your asset realization, you will record that 5,000 as your machinery to show that you have subtracted it from the asset machinery and you're now moving it to asset realization, which is an account that you only use when you're selling an asset. So that's your first number one. The first step is transfer the cost price. Transfer the cost price of the asset sold to the asset realization. At which, in order for you to transfer that, what you do is you debit asset realization and you credit the machinery or asset that is being sold. This is your step number one. Step number two is, okay, so let's start with step number one. So we said we are transferring. They told us that we had two machines, two press machines of equal value. Both of the machines were purchased by obtaining a loan from Baker, and they were charged 15% and so forth. And then it says on January 31, management decided to increase capacity and purchased the Prince machine. So which means we sold one of the machines. What you do is you say 102,000 divided by 2. Because they told us that these machines were both equaling the same amount. They had the same value, and then we get to sell one. So which means you simply say 102,000 divided by 2. How much do you get?
51,000.
51,000, which means here you come, you record machinery, 51,000. Okay. Then you move to step number 2. Your step number 2 is to transfer. But first, before you transfer, you need to first check if depreciation was calculated up to date of sale. So check if depreciation was calculated up to the date of sale. Was calculated up to date of sale. If not, you need to calculate. When you have done calculating, then you need to credit depreciation and debit accumulated depreciation. Once having done that, then you need to debit accumulated depreciation and credit asset realization. So the first step is you crediting your depreciation, and then by crediting your depreciation, you're debiting your accumulated, and then from accumulated to remove and close off that amount, you will now credit your what? So here we say it is debit accumulated, and then you credit asset realization. So which means here on your asset realization, you record what? Accumulated depreciation. Then we need to first calculate or check if it's been calculated up to date of sale. They told us that depreciation is 20% per annum by the diminishing balance method. And then they also told us that on 31 January 2024, management decided to increase production capacity and purchased a Prince machine on credit from MEG Ltd for 108,000. One of the press machines was traded in, reducing the amount to 84,600. Okay. Do they tell us when did we sell this asset? Do you see which date did we sell this asset? Did we do a trade in? So here we didn't sell it, but we did a trade in. And the date that we did the trade in is what? Do you see it? Do you all see the date? Can you guys hear me?
Isn't it the
Was
first?
it 31st January?
Yes, 31st.
Okay.
So now you say 20% times open brackets. We said this divided by 2, which you got 51,000. And then now say this one divided by 2, which is 55 to 920 divided by 2, we get 27,960. So I'm dividing this by 2, dividing this by 2, because we want for one asset, at which is going to be 51,000 minus 27,960 close bracket times. So the last time that they calculated depreciation was on 31 August. So now we'll say August, September, October, November, December, January. How many months is that? How many months is that?
Six.
It's 6, because it's August, September, October, November, December, January. It's actually 5. We are not counting from 30 August because we're starting from 31. So which means we're starting from the next month, not the beginning of August.
Okay.
Right. So which means it will be times 5 over 12. How much do you get if you punch that in? 20% times open brackets 51,000 minus 27,960 close brackets times 5 over 12. How much do you get? I'm getting 1,920. Is everyone else getting the same?
Yeah.
Okay. So now you will say 27,960 plus 1,920 to get your total accumulated depreciation. Should be 1,920 plus 27,960, which I am getting 29,880. Is everyone getting the same? Okay. So it will be 29,880. And then they told us that one of the press machines was traded in, reducing the amount owing to 84,600. So now I want you to say 108,000 minus 84,600 so that we can find how much did we trade in our asset for. Because they're telling us how much we are now owing them, but we need the amount of how much did they actually subtract from the trade in. So you say 108,000 minus 84,600. How much do you get?
23,400.
23,400, which 23,400 will be what? Your trade in, or you can record it as a trade payables, and then you record the company's names, which is Meg LG Ltd. Then you record it 23,400. And then now, since we are done with this step, you now need to calculate by saying which side is more than the other. So you say 29,880 plus 23,400. How much do you get? We are now adding this side, the credit side, because we need to find out which side is more than the other. Which side is more than the other?
5328.
5328. 5328, like this.
Mm.
Okay. So which means the credit side is more than the debit, right?
Mm.
So which means if the credit side is more than the debit, we have made a profit. So that's when it becomes a profit on sale of asset. Then you record the difference, which is 53,280 minus 51,000, which will be 2,280. That's your profit. And then here you record 53,280, 53,280. Then you are done with your asset realization. Do you have any questions? Do you have any questions? Okay. If there are no questions, then this is our class for today. We will continue with the other topics tomorrow. Please practice, and also wherever you have questions, just send in the group and then I'll respond.